So I got asked in the live stream yesterday talking about the Canadian dollar, what's going on with dollar CAD, what are my expectations of dollar CAD going forward? And this is a really tricky question to answer. And the reason being is because of the volatility involved with the pair right now. So what are we seeing at the moment? Well, dollar CAD price has come into the 2020 high. I talked about this on the week ahead, citing that this could be an area of real key interest for the market. We're starting to see dollar CAD push lower. Now, the reason why we're really starting to see dollar CAD prices push lower is because of the news of Trump agreeing to sort of pause any kind of tariff plan, right? So the headlines that we had recently was Trump agrees to pause tariffs on Canada, Mexico, but not on China. And essentially what happened was President Donald Trump has agreed to hold off imposing 25% tariffs on Canada and Mexico for 30 days. And essentially what we had was the fact that last-minute calls between Trump and Trudeau agreed to reinforce the country's border with the US to clamp down on migration and the flow of the deadly drug fentanyl. We saw a similar situation with Mexico as well. So from that, what we've seen is the fact that the dollar CAD price, which had gapped over the weekend on the talk of Trump tariffs, after those tariffs came off, we've seen dollar selling. This is something that I talked about in that week ahead analysis video. What we're seeing in the markets at the moment is threats of tariffs. Market is going bullish US dollars. After some kind of negotiation or deal has happened, dollar is being sold off. And that's the kind of moment we're in right now. We're in the moment of the fact that these negotiations are now on hold for 30 days. So maybe we've got some kind of respite for 30 days, essentially. What I found interesting, though, was that we're now starting to see Trudeau kind of going outside to try and reignite some trade deals as well, potentially between the UK and Canada. Essentially, they post-Brexit, there was a potential deal between the UK and Canada. That didn't go ahead in the end. And as simply put it, there was a situation here which is explained in this article about the fact that negotiations to replace a post-Brexit UK-Canada rollover deal collapsed after long-running battle by Canadian farmers to get hormone-treated beef into Britain. So the negotiations broke down, and then, so that didn't go ahead. But now Trudeau trying to find different ways of how to get Canada some business, right? Going back to the UK, seeing if he can revive interest there. Going on to some normal economic reports that we would typically look at, and we're going to go take a look at some currencies. First one I always look at is the interest rate. What is the interest doing at the moment? We can see the interest rate is down to 3%. They've cut since the start of May, or the end of May, sorry, and they've basically cut in every single meeting. And they've done that for a number of reasons. One of the main reasons was the fact that the unemployment rate was so high. In November of 2024, it reached 6.8%, and it had been on a significant climb since 2024. So there was a movement here by the BOC, and they wanted to basically cut interest rates to try and support the economy. Now, if you look at forecasts on Trading Economics, they're suggesting that actually unemployment rate is meant to decline still because of the cuts in interest rates. So that's a potential positive. That's, more people working, more people contributing to the Canadian economy. When we go back to interest rates, we can see that we're down at 3%. But if we start to see things like the inflation rate slowing down a little bit, if we start to see GDP start to climb, if we start to see unemployment start to fall, then they may not need to continue to cut interest rates at the pace that they are doing it at. And I think that's where we could start to see some support coming in from Canada. If we go take a look at the GDP growth rate at the moment, forecast suggesting we could reach 0.9% in Q3 of this year. And that is a move higher. Q3 of 2023, we're at minus 0.1%. So if you look at the average there of GDP, moving to the upside, which would be a positive. Inflation in Canada at 1.8%. Again, within that target range. Forecasts highest is meant to be around 2.2%, but really sticking to that range between sort of 2 to 3%, which is what central banks' targets are. One report that came out today that was pretty good as well for the Canadian economy was the balance of trade, and that was in a trade surplus. And we've seen that the first move out of being in that sort of contractionary period, that deficit period, and they'd been in a deficit since March of 2024. Now starting to come out the other end of that. So positives definitely for Canada, or the Canadian dollar at least. Another one is I went to the commitment of trade reports, and I wanted just to have a look at what was going on, because when I take a look at what the commercials and what the large speculators are doing, they are technically towards extremes. You know, the last time we talked about being involved with a long opportunity on CAD futures was when we were at this 0.72 area. And that was because commercials were at levels we hadn't seen before in terms of buying it. Hedge funds were at levels that we haven't seen before in terms of selling CAD, which often leads to a reversal. Market rallied higher. But then obviously we had the situation with the US dollar in September, and that then drove prices down here. But like I said, we're at the 2020 lows. We're still in fairly similar areas in terms of contracts. Now, one thing I just wanted to kind of draw your attention to was the small speculators. Now, small speculators usually get it wrong. Okay, so when you look at the commitment of trader reports, small speculators can be the ones where they kind of pile into moves at the wrong point. Okay, so an extreme that we had was back in 2020. Okay, now this might be an outlier because of what it was, but still contracts now from the small speculators are at similar places they are in 2020. What happened there? We saw a significant rally in CAD futures. What are we seeing now? Well, we're seeing this potentially big reversal. Okay, so I actually think that the Canadian dollar has probably been mispriced for a little while now. I think obviously the threats of tariffs have been the big driver behind dollar CAD moving to the upside there. So long story short, where could dollar CAD go next? For me, the likelihood is that whilst negotiations are on pause for 30 days, we'll probably see a stronger CAD, and we'll probably see a stronger CAD against the US dollar with potentials back down to 139. Is this a market that you should get involved with? Now, that is a very interesting question, because we don't know if at any point Trump is going to say something that could then bring across some kind of retaliation of that. So to try and get exposure to something like this right now, I think is very, very difficult. Although from a value point of view, I can see it. We're at 2020 highs. The commitment of trade reports are giving us a slight sign that there could be some kind of reversal here on CAD futures, which means dollar CAD to the downside. I'm just struggling to find a good value trade in this at the moment, because one tweet, boom, dollar CAD could be through the roof again. So yeah, that's where we're at dollar CAD. I had the question, wanted to give you my opinions on it. I hope you enjoyed the video. If you did, give it a thumbs up, subscribe if you're new, and I'll see you soon.